Hello, welcome to EBA Day TV. I'm speaking to Martin Coen, the CEO of Dovetail. Martin, may I ask you, how would you characterize the transaction banking market going into 2012?
I think it's a landscape of change. Transaction banking continues to be at the forefront of the agenda for most banks worldwide. We're seeing a sort of continuing tide of regulation and the changes in the market driven by that. We're seeing the payment activity rising. I think Swift messaging has grown by 10% or so recently around the payment space alone. And we're seeing competition increasing, both in banks targeting increasing numbers of sectors or going after each other's business, and especially in particular areas where the value chain is getting reshaped, and foreign exchange will be a good example of this. So overall, really a landscape where there is a lot of change now, and therefore a lot of threat and opportunity.
How are the banks addressing this changing landscape?
I think transaction banking is maturing, and with that, the bank's appreciation of addressing that market is progressing. So I think there's a general appreciation of a much broader view across transaction banking in terms of the services being provided out to clients, in terms of the efficiency of operations and how those are managed, and really in managing and controlling risk both for the bank itself and for its customers. Mm-hmm. I think in balance to that, there's a greater realization now that this is really a very global market in which even the largest banks are cooperating and working with each other to find access to particular markets or currencies. We see that with the very global banks now who maybe are more cooperative than they were a few years ago, or more willing to balance their portfolio by cooperation as well as sort of manufacture themselves. And in particular the regional banks who are trying to offer services on a wider basis to their clients and are doing that through a more extended ecosystem in how they connect and provide value from other banks around the world back to their customer bases themselves.
We've seen a lot of regulation being drawn up around the globe to address various systemic and bank risk. Is this handcuffing banks from innovating? I
think regulation is a fact of life today and set to increase. I think with things like Dodd-Frank and the follow-on from that, there's no sign that this is going to slow down. I think that puts pressure on banks, and I think there are challenges in addressing local regulations, and there are even greater challenges in balancing the global regulatory landscape with local market regulations across the globe. And I think the way that regulations change, or the way that regulations come in place, or shared banking initiatives and changing schemes can have unintended consequences around how business models work. So undoubtedly these are challenging times for banks, and it puts pressure on the way that they try to see their business going forward and the investments they need to put in place just to be able to stand still or to keep moving in the market. But it's a level playing field. So I think what's interesting in regulation is the way that different banks address that or try to take advantage of the landscape as it moves forward. And that's both in efficiency, in managing operations and systems in a consolidated way to allow them to respond to regulatory change perhaps more efficiently or more quickly than their competitors. It also plays back to the cooperation across banks in terms of sharing the regulatory load and using other banks with local market knowledge and expertise to provide that regulatory knowledge to them. But it also has an upside and opportunity. So we see examples of banks not just seeing regulation as a purely compliance activity, but seeing it as a market in which they can offer services and value to their clients as well. And I think the banks that take that view of regulation are the ones that are beginning to differentiate and see an advantage. I think one particular example in recent times in Europe is around intraday liquidity and information flows. We see some of the banks that we work with in taking the opportunity not just to address their own compliance needs in that market, but at the same time to make the investment in a smarter way that provides systems and operations and capabilities that they can offer out to their clients themselves as services that give value to those clients as well. And I think the banks that see those opportunities in the regulatory market are able to innovate and in fact use some of that change as a way of innovating rather than just seeing regulation as a compliance and a drag on their business.
And on that note, Martin, how do you see the market changing with the certainty of a Separ end date?
Well, I think the Separ end date discussion and seeing the dates now fixed has of course brought a lot of focus. I think it's not necessarily completely certain, but it's certainly a lot more certain than it has been. And that's allowing banks really to move forward and look more clearly, I think, and with maybe a lot more clarity in their services and business about what they're focused on. So I think if you put it simply, this has really been a transition from seeing Separ as a regulatory requirement to now going forward as being a full business requirement. So we see that quite a lot in our discussions with banks. We see a change now from pure compliance to understanding how the services in Separ are going to be rolled out, how a bank can be competitive in its offerings in Separ, how it can handle larger volumes that matches existing domestic flows, how it can provide late cut-offs to clients, or provide increased automation to its corporates in terms of the Separ payment flows. And really that change away from compliance into the business of Separ is what's been driven by this focus around end date. What we're also seeing, though, is banks that had made initial tactical decisions in providing pure compliance solutions in the Separ market are now looking only a few years after that investment to replace those systems with systems that are now fit for purpose in competing in the business. So in the last 18 months, we've gone through a number of discussions with banks in replacing existing Separ solutions with systems that they see now as being fit for purpose and allowing them to compete more fully. And we see that trend really set to continue now as we move up towards the end dates and the businesses start to focus, or the banks start to focus more clearly on how they're going to win and maintain business in a post-end date world in Separ.